For the bulls, they have a double bottom 25, but 6 consecutive bear bars, I think, is a problem, and the market will probably need a second leg down before it can go up. However, if instead it just simply breaks to the upside, then obviously I'm wrong. Right? But right now I suspect that we're always in short, although I think that there is not a lot of downside. Remember, coming into today on the daily chart, I thought today would be have 20 bars up and 2 legs. On the daily chart, I thought that we probably would form a doji bar. After 3 very strong down days, it's unlikely we would form a strong bull trend bar. So I think we'll either end up with a doji bar or a prominent tail on the top of the bar. So we may close around the open of the day. Even if we rallied strongly, I thought it would probably end up as simply an inside day. The failed flow 2 and the bull breakout. I still think there'll be sellers above. The bears will try to get a lower high major trend reversal. So for me, I think buying is just scalping right now. Selling is scalping as well. We've been sideways for about 20 bars. Suppose we get a strong bull breakout here. That could change my impression, right? But right now I think that it's more likely today we'll have a big tail on the top of the bar, that today will be an inside bar, and that will close somewhere around the open. You know, maybe where we are here, I don't know. And this could be the big tail on the top of the bar on the daily chart. 60-minute bar closes in 15 minutes, and right now we're getting a failed bear breakout. We have a double top and a bear bench breakout, bad-looking signal bar compared to how big these bodies are, and so far bad-looking entry bar for the shorts. It's possible that we could go outside up, which means it's possible that we could get above the 32 high before the 60-minute bar closes. It closes every multiple of 12, so bar 48. So it's possible bar 48 could close above 32. Not likely, possible. More likely, we're going to form a lower high major trend reversal and then get a second leg down. So one leg down here, and then you look at support. There's support. So maybe the second leg down will start somewhere up around here. A breakout test, 33 low. That would take us down to a support level. Yes, it's a lower high major trend reversal, but it's also a tight trading range. So not a strong short. Right now, again, we're working on the appearance of the 60-minute bar. We had a weak signal bar for the bears last hour, and so far a weak entry bar. The entry is the move below the 25 low. Obviously, that's a weak sell. We immediately reversed up. So this is a swing short only, stop above 32. I say that you could scalp and put a stop above 32 as well. And for the bulls, I think they need a better test of the 39 low. Can you short as this bar is forming? Well, you're shorting at the bottom of a tight trading range. I think the short, if you were taking it, was above 40 or below 46 or the 46 close. And I think it's okay if you did take it to scalp out with 2, 3, or 4 points. You can short down here for the swing, betting on the lower high major trend reversal. But I suspect that sideways is more likely than down, although this bar is becoming big into the close of the bar. Maybe we'll get the bear breakout. Again, I think the day will try to close around the open of the day and create a doji bar on the daily chart. We're heading that way towards support, so we're getting vacuumed down there. We still have a lot of time left. Usually the market does a counter trend move into 11:30 or so. What do I think is going to happen on 48? I think a bull bar, right? I think we're in a trading range here. I think the entire screen is a trading range, but on the day, this is a trading range. So I expect every bar is going to have bad follow-through. 38, 39, or 39, 40, bad follow-through. 41, 41 bear bar, bad follow-through. 45 bull bar, bad follow-through. 47 big bear bar, but I still think probably bad follow-through. What will I need to change my mind? Probably 2 or 3 consecutive bear bars closing on their lows. 2 very big bear bars, 3 smaller bear bars. We had trading range price action right from the open. Right, big down, big up. 3 bull bars, but sellers below instead of buyers below. Bear breakout, reversal up, then reversal down. Right, and bad follow through after trend bars up and down. All trading range price action, and you have to assume that it probably is going to continue, which means there probably will be bad follow-through after this bear breakout. Remember I said the market was probably going to test the 38 close after a rally. Well, we've had the two-legged rally. We just tested the 38 close. So a lot of bears will buy back shorts here. I know it's easy to look at this and say that's so not fair, right? How can they do that to me, right? It's a trading range day. You have to expect bad follow-through. You know, we've been getting bad follow-through all day, except through this rally. We had good follow-through. But for most of the day, we've had bad follow-through. So you should expect that bad follow-through is more likely than good follow-through. So the market's not doing anything to anybody. It's just doing what makes sense. I said I thought we'd get a second leg to down and test the 38 close. We have it. What about buying above 42 for a double bottom? You call it a triangle. 25, 38. 47 is big enough to reduce the probability for the bulls. Plus, I think the open of the day is a magnet. And I think right now, I think better than 50-50 chance we're going to get back to the open. So it's a low probability buy. You can buy it for a swing, but I think more likely we're going to work down to the open. We might get a hinge loose top bear flag here, so we may bounce maybe all the way up to the 47 high, and then get a smaller, another leg down. So for the bears, what they see is a bear breakout, 2 legs up, bear flag, bear breakout of the bear flag, and a pullback from this breakout, and they think sellers above for a second leg down. What the bulls see is a triangle or a double bottom. Doesn't matter. Some computers will call it a triangle. So they see this as a bull flag, and they're looking for trend resumption up. Leg 1, leg 2 up. So leg 1 and then leg 2. But if they see it as a triangle, then leg 1 ended over here, and then leg 2 would be starting here for a move up to the 60-minute moving average. Not high probability, but okay swing. Higher probability to wait to see if we get a strong bull reversal and then buy. Bad for stop entries, tight trading range, unless you're using a swing stop. For the bulls, minimum stop would be below the 39.48 double bottom. Next stop would be below 40. Open of the day, but I think that's where the market is going. And usually when it tries to go to the open of the day, it gets beyond it at least a little bit. Low probability short here, 49, a pullback from the 47 breakout, but it's forcing traders to short at the bottom of a trading range. So buyers or sellers, 49 low. Low probability, so higher probability that we find buyers. We're also in that time when the market often traps breakout traders. Between 9:30 and 11:30 or so, that middle third of the day, if there is a lot of trading range price action, it tends to persist. Bulls want a break and a measured move down, at least based on that, possibly based upon that.